good evening, all. Ira Epstein, and here we are with your metal market wrap-up, and I'm very early. It's 5:10 p.m. Central Time. I'm early because I don't have a choice. My wife's dragging me out. We got a huge birthday party for one of our closest friends, so I have to be out of here shortly. Now, today is the 20th of March, 2024. The time's 5:10 p.m. Central Time, and we had the FOMC. So I want to put up what the Fed did. 3 rate cuts left. Number one. Number two, the Fed isn't worried about wage inflation. They made that clear. If you go through these points, and I'm not going to go through every one of them, you see that they're not going to cut as much in 2025 and 2026 as they're projecting. Now, remember something, because this is so important. They have no idea what the next 90 days worth of data is going to look like, and yet people want to believe that they have an idea what 2025 and 2026 is. Therefore, they're called projections. They're better than having nothing. It's their best guess as to what it is. He made it, and I'm talking the Fed chair, very clear that, yeah, we may have the first half of the year higher inflation, but they don't think it'll be dramatically higher, number one. Number two, he's still looking for in the CPI, the shelter inflation, the fall. And if they're correct, you're through with rate hikes, and you are looking at when you will get the potential 3. They didn't cut back one. I was surprised at that. They have good GDP numbers, 2.1% this year and 2% and 2% 2025 and 26. They really don't see unemployment going much higher than 4.1% at the end of 2025 and back to 4%. So we're at what, 3.9? We're basically where they're looking for there. He doesn't think wage inflation is the problem. It's regular inflation, and they do think they have a handle. This could not have been a more dovish day for the Federal Reserve. I was surprised at just how dovish it was. And by the way, so was the marketplace when you get into it, because you'll see in a moment as we look at the charts and go there in the financial update how they shot up. Gold is up $35. Now you're going to say, Ira, what's going on? The settlement price in gold is at 12:30 p.m. Central Daylight Time. The Fed statement's at 1 p.m. Central Daylight Time. That's why silver's up 73 cents, copper's up 4 cents, basically $14 higher in platinum. They responded. They move after the settlement. They trade till 4 p.m. Central Time, but the settlement price is determined before then. The dollar was down 40 points, and most currencies rallied rather sharply against it. They closed at 2 o'clock, so you have to understand, the Fed was still talking, the Fed chair. He began at 1:30. He finishes up about 2:20. Therefore, there's still items in there that you have to think about. Bonds and notes, okay. And in the Bitcoin, you went down to about $60,500, and you dramatically rallied after all this. So everything that's inflationary came alive, is my point. Now, when you look at the gold market, this is a new high for the move. It's that simple. You had a down flag. One of you wrote me on it. Very good. Good call. You broke out of it, and you can see what you're doing. So now this is your pole. The flag was waving. Sometimes they'll go actually a little further sideways. It doesn't matter. You've had your breakout to the upside. Traders will probably buy where that breakout point was if they get a chance to do so. The pattern is a vertical rise with today's action. You can see because of the settlement, you were down here. Towards the end of the day, you were near the very high, and you've opened and made a higher high on it as traders stop orders. I'm caught, I'm wrong, the market didn't break back, you get that thinking. And the Bollinger top at 2250, let's call it 45, in that zone could be, I didn't say it is, but it could be where the next resistance point is. And what did the market do? In the futures market, you did not regain the bearish embedded reading. What you did in the futures is you kept that loss. In GLD on the ETF, you regained it, not the futures. So you have an overbought market that's got to prove itself, blah, blah. Be careful of the yin-yang. What do I mean by that? Think of the time that our announcement comes out. That's 1 p.m. Eastern time. right? What time is that in Europe? European traders are typically out of the office. They're with their families, they're out to dinner. Asian traders are asleep. So as Asia wakes up, they'll go through the markets. It either got ahead of itself, it didn't. We want to buy more. It'll move to Europe. And by the time you wake up in the morning and I start recording at 5 a.m. the subscriber video, who knows where we'll be. That's the reality of the situation. But this was a big move today, so it could take back something. You don't know. The gold-silver ratio still favors the silver market. Silver kept its embedded reading all the way through. Target in this market, 26.27. Did you ever think we'd be talking that you're coming right through these highs from December? And that's what the market is shooting for. And in the copper market, you lost a little momentum in the market. I don't think it'll stay lost very long. I think you're going to run a deficit in copper this year. And if the Fed is this friendly, the question to me is how to buy the copper. Once it either corrects the overbought condition or re-embeds. It's got to do one of the two. When you take a look at what the market did and where it was, this is how the market looked on Tuesday. Today, Wednesday, you lose the reading. The only time you can get it back is the day after it's lost, which is Thursday's trade. You can already see where you're at. Won't take a reel out if you gain much more here. Another couple hundred points, you could re-embed very easily. The platinum doesn't appear it wants to make its run to the Bollinger Band again. I think the battleground is now the 18-day average of closes. And in the dollar, well, we were thinking, could it get towards that 104 zone? Now, because of an outside date of the downside, you made a trading top. I didn't say you've turned the trend on. You've made a trading top in the market. You would have to take today's high out to get me convinced that it was just a flash in the pan. I think they pulled the rug out from under the dollar today. We'll see how it follows through overnight. It fell back to its support of the 18-day average in the 100. Now, you just saw me talking to you about chart patterns, and that's in our futures trading kit. We have 14 chart patterns. You print them out, you can put them on your desk, and you're going, oh, wow, look at how easy this is to look at. You can put them in your cell phone. They're easy. Just make it there, and you can open it as a PDF, whatever you like to do with it. But these are tools for beginners, too. You've got your chart patterns. We give you some money management ideas. We explain option trading. We explain as best as we can pivot points, the Arun indicator. These are free courses that we include in this. Our charting software. You see the charting software I'm using? You can try that. Cause and effect. This is all about the Federal Reserve. Actions they take. What does it do to the markets? Why? And then all the access to the CME group, their charting courses. So how do you get this? It's free. Go to our website under free offers, or move your cursor right up here. Give it a click when you see that icon. That's the way to do it. I'm Ira. I'll talk to you tomorrow.